Welcome folks. This is a market review for NFP. News release. So before NFP, I decided to take a look at gold, and I saw these relative equal lows. So we had Wednesday's low and Thursday's low. So normally we don't trade around the NFP, but I decided to NFP. I remember I promised to show you how to trade news. So and this is it. So we had the Non-Farm Payroll released on Friday. So we had these lows, we had this inefficiency, and then we had these relative equal lows also. So these are 15-minute chart. So when the news was released, so I was on a 1-minute chart. So so let's have the 1-minute chart. So we had this run on liquidity. So for a non-farm payroll event, it is a two-stage event, whereby the initial run is always a Judas swing, and then you get to have the real move now. But on this event, no. So this is what I'll tell you today. No one is ever right on the market. You are never right about the market. No one is. It doesn't even matter where you come from, where you are, who you are. It doesn't. No one is right, especially on such days whereby there is such a big event like the non-farm payroll or CPI, FOMC. Yeah. So as I was looking at this drop, and it came and took out both lows, so I was anticipating for a run higher, taking out the buy side. As you can see, we had pretty much had a consolidation during London, heading to New York Open. So at 8:30 we saw this sharp move lower. So I ended up going long around here. So my broker has an issue. I can't get to show you the actual executions. So maybe on Monday I'll do something about it and show you the actual executions. As you can see, nothing. I'll show you. You can see nothing is showing around here. So maybe on Monday they'll resume to the normal operations. So I went long around 1917, which is around there, 1917.01. I went long there, and my target was this high. So I was anticipating for a run on that, because as I said, NFP is always a two-stage event, whereby the initial move is always a Judas swing, a move that tricks traders to think it's gonna move into that direction, and then it reverses and take them out. So we had that. So we had two events, news events, that were to be released on Friday. So we had the non-farm payroll, and then we had another news event at 10. So when I saw this drop, and it has taken sell side, so I went long right there, and my target was taking out these highs, but it didn't give me that. So since I normally don't trade gold, so I don't analyze gold a lot, we had this inefficiency. Right now it doesn't look like it's an inefficiency. So in case you forgot, let me go back to the 15-minute chart. So we had this inefficiency right there. So I didn't have the I didn't see this before this initial run, because my eyes are not always on gold, but yeah, it happened. So as an ICT trader, you should always know that our real resistance and support are the inversion fair value gaps, breakers, and order blocks. Those are the PDRs that we use. So these didn't respect the inefficiency, so it came, passed through it, taking out the sell side, and then when it came back, we had that gap acting as now real resistance. So we had this initial run, then came lower, ran up high again into the inefficiency. So, and we also had this inefficiency. So it was reasonable enough for price to gravitate towards this inefficiency, use it as resistance, and then send price lower. So the way you could have framed that is taking let's say this high right there and this low. So these are fib. So this 50% of this dealing range, the upper half, that's a premium according to this dealing range. So when you see this and you anticipate for shorts, you could be going shorts at premium. Don't go short at around this area. This is a discount array, so it could be going short above 50% level. So it went to a premium inside of the inversion fair value gap. So we had a run, first run, and then we had the second run into the inefficiency. So let me delete this first. So if you want to know if price would respect an inversion fair value gap, you mark the entire range of the gap, and as you can see, no candle close was above the midpoint of the inefficiency. So that shows you that it's really bearish, it's heavy, and it won't even go to a premium of the fair value gap for it to move lower. So we had that is algorithmic, that is how price delivers, and those are the signatures that it's going to be a reversal, or price is respecting those levels. As ICT, we only do 3 levels. We don't do zones, we don't do areas of whatever, anything. We deal with 3 key levels. Either we deal with the midpoint of the gap or another block. The 75% level, which is half of the lower half, and the 25% level, which is the half point of the above half of the inefficiency. So if you are treating this as an inversion fair value gap, you don't want to see our price closing the candles above the midpoint. If it does so, that raises alarm as to if and uncertainty if we are going to run higher or lower. So if you take your fib, measure that into 2, it should not close above the midpoint. and as you can see, the body is respecting the midpoint of the gap, which we call the mean threshold. No, the consequent encroachment. So consequent encroachment is the midpoint of any gap, be it a fair value gap, a volume imbalance, or a real liquidity void. So a midpoint of an order block or a breaker block is always mean threshold. So never forget that. So relative to this high and this low, we had this gap was in a premium. So it was quite okay for us to frame some shots around there. But I didn't have the insight of that gap since I don't trade gold. Yeah. So there was a swing low right there, and then we had a break of the swing low. We had this gap, and we wanted this gap to be treated the same way we treat the inversion fair value gap, since the lower time frames are subject to the higher time frame. So this being a 15-minute inefficiency, this one will be subordinate to that. So this one will be stronger than this one. So as you can see, this inefficiency. Let me show you something. We had that. As you can see, this would have been, if you are really bullish, none of these candles would have closed below the midpoint of this inefficiency. But we had that, we had a close. So since we had that, we could not see this as a bullish scenario for this gap to send price higher. So we had to wait. So we had this inefficiency right here. So and we had a swing low taken out. So our entries for shorts would have been framed right there. That on my shorts. Yes. And our stop loss be placed above that, or just above mean threshold of the order block right there. Since price was heavy, that would have been a good stop placement. So, and we could aim for something down here, maybe this low to be taken out. So so when price came, moved up, got into this inefficiency, as you can see, it didn't feel the inefficiency to the upside. It only got to the lower half of the inefficiency. So that shows how heavy it was. It wasn't willing to fill in the entire inefficiency. So this is what we call an institution order flow entry, whereby the inefficiencies are never traded entirely and repriced to. So we had that run higher. This, we could have been going short in this candle right there as it was moving up. So going short right there, maybe pyramiding right there. So could also, as you can see, we had this sharp move to the downside, and then this candle, when it opened, we went fast up, touched the lower portion of the fair value gap, which is now an inversion fair value gap. So we had that. So when it was coming up into the gap, that would have been another entry and a stop right above this high. So we had this run taking out the sell side, and that is the news release, whereby it went to a short-term premium and then moved on to lower prices. So that was it for gold. The reason why I went long here is because I was anticipating for a run higher into the buy side, and we had already cleared some lows, and sell side liquidity was taken right here. So I was anticipating for a reverse. So this didn't give me what other assets were doing. So we had you see this, you can see for this is the same duration of time whereby the news release. So we had this 0 USD. So we had as you can see, we had this reversal right here. So I was anticipating for such a move to the upside, and maybe later in the day taking out these highs, as you can see Euro USD did. So this is why I always say NFP is always a two-stage event, whereby the initial move is always a Judah swing, and tricks traders to go short, and then it reverses on them, takes them out, and clears the buy side. So it didn't have that much of clearance, but at least we saw some significant retracement and taking out the buy side. So that is what we had. So on Friday there were no trades to be taken around, because you can see the market was in a range bound since the Asian session. So there was nothing, literally there was nothing to trade. Even the London open silver bullet, yes, we had this run, but on Fridays, the first Friday of the month, which is always the NFP release, there is always a lot of manipulation, so you gotta be careful about that. So we had quite a good retracement. For I think we had an even better retracement on pound USD for the same. As you can see, get the initial run on liquidity taking out, and then it reversed, aiming for the buy side, and it worked itself into the inefficiency, and then we had this move lower, taking out the low, and then reversing. So for this we had what I usually call SMT divergence. So as you can see, this low and this low for euro and for cable, this was low, and then we had this low and this. So cable made a lower low, while euro was unwilling to make the lower low, as you can see. So this will look something like this. So we had this move there, and then we had for euro we had that. So that shows SMT divergence. This was willing to make the lower low, but euro was unwilling. So when you see this one being unwilling to make the lower low, and if you are going long, you should be going long on the one that is unwilling to make the lower low, because it will give you the biggest range. As you can see, we had this run higher, taking out the buy side, but for cable we didn't make it to the buy side. So and it repeats for the same, because you can see here we had a lower low for euro, but here we had a higher high. So if you are going short on cable, this would have been the one to trade, not euro, because it was unwilling to make the higher high, so would have gone short right there. So yeah, so that's it. So during this, there was a very nice trade on euro, because we had two news release during on Friday. So of course the first confluence was that we had the SMT divergence from cable and euro. So when I saw this was a good opportunity for longs. So we had this low, so we had a high, a low, high, lower low. So the sell side was taken. So what do we do to this? They are most up close candle. This is what we call a bullish breaker, whereby sell side has been taken. We had the SMT divergence, which means cable went past this low, but euro was unwilling to go and take out this low. So when I saw this and I had this breaker being in play, we had, this was even before the news that came at 10. So we had a run higher and a move lower. So you could have entered long right in here inside the breaker, or right here. If you had the insight that price would reverse and go over to maybe take this high and eventually this, that could have been a very nice entry, but you could have gone long right here, put your stop loss right below the this breaker block. So as you can see, price did not close below the breaker. So we had this box denotes the uppermost closing candle. So we had this bullish candle right there. So I marked the entire candle and then extend it forward. So that's a bullish breaker. So you can be feeling some entries right inside the breaker, or if you are quite aggressive, you could have done it. As you see, these are bullish, these are bearish order block. So anything can be reversed. So when we trade above this and then treat this inefficiency as support, you could have been going long in this candle right there. As it was moving down, you're going long into this inversion fair value gap. So we had that, and then we had this kind of like a high, and then you had this drop into the inefficiency and into the inversion fair value gap. So these were two entries. If you missed this one came, and then there were two opportunities for you to go long on. So this was a nice trade. We had crazy also risk to reward 6.46, as you can see. So that was a trade, and you could have anticipated for a run higher and taking out these highs and eventually into the buy side that was lying above the highs. So we had that run, and then we reversed This was at around 10 also. So there was plenty of trades during on Friday, that is. So yeah, that was it. It was quite a profitable day, but as usual, we don't trade around those big events such as NFP, FOMC, and the CPI. They can rip your face off if you are not careful, if you don't have narrative of where price is likely to go. So I think I'll do a review on gold, and I'll show you the real executions and I think the broker gets to back in business. So as you've seen, it is not quite hard to trade during the NFP, but what you have to do is wait for the initial run, see where the market is likely to, who is it aiming for? Is it the buy side or is it the sell side? If one of them gets taken, it's not always, but you can frame some entries to the opposite, whereby if it dropped like it did on Friday, you could be framing some entries and taking out a high. So you don't want to be caught in the initial run. You wait, be patient, wait for maybe it's 8:30. Just wait for maybe 8:33, 8:34, 8:35. At around there, then you could be framing and seeing if price is willing to reverse. So yeah, that was it. This was a good run. We could have traded, and then we had this retracement to the upside at around 10, whereby we had this news wasn't that volatile, and we could be trading such news events. They're not so volatile, so you can trade around them, you can be in that move, but also be careful. These markets are so manipulated, so if you're not careful, you'll end up being kicked. So it's not always good thing to trade whenever there is a news event release, especially the actual release. But for such events, that wasn't a bad trade to have taken. But I usually don't trade around Fridays, the first Fridays of the month, because they're so volatile, they're so manipulated. As you can see, during London and Asia, we had a lot of consolidation heading into New York. So that's it, folks. On Monday, I think in the morning, I'll be doing a review on gold and showing you the actual executions on gold. So until I see you next time, be safe.